Hi, good morning, and welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Last week, Indian stock markets continued to rise along with the rally in global markets. Sensex and Nifty gained around 1% last week, and if you see, majority of sectors posted positive returns, with some sectoral indices making a fresh 52-week highs. BSE Realty, Metals, Healthcare, FMCG were amongst the top performers last week. And if we see globally, markets reacted to US Fed meeting outcome. In its latest meeting, the US Fed announced a pause in interest rate hikes while suggesting that some further increases in rates may be required in 2023 to bring inflation below 2% over time. On the domestic economy front, that is in India, May CPI inflation or retail inflation at 4.25% surprised on the downside, and trade deficit in May widened from April levels amid a sharp rise in non-oil imports. Now if we come to foreign investors' participation, FIIs continue to be net buyers to the tune of rupees 6,887 crores so far in June. FII flows in June were mixed for emerging markets except for the Philippines, Indonesia and Thailand. All other emerging countries witnessed inflows. Now let's look at the stock picks for the week. First, we like InfoEdge or Naukri.com. We have a buy rating on the stock. After registering healthy growth of 17.3% year-on-year in FY23, Naukri's jobs peak index declined 5.2% in April and 0.5% in May 2023 of this year. IT hiring slowed considerably in FY24, with the IT services index declining 23% year-on-year in May. In this context, the minor year-on-year decline in overall index in May was palatable and was propped up by oil and gas, infra, real estate and BFSI. Non-IT hiring comprises nearly 50% of Naukri's revenues, and relative strength in some sectors may result in resilient revenue trajectory. IT hiring weakness notwithstanding. So we retain ad rating on the stock with a revised fair value or target of rupees 4,950 from 4,700 earlier. The fair value upgrade is driven by a higher valuation of Zomato and roll forward to June. Lastly, our pick of the week is Adani Ports with a target price of 835. Adani Ports reported inline results adjusted for Haifa consolidation. More importantly, it sustained net debt to EBITDA at 3 times year-on-year in spite of the large investments made in FY23. It expects FY24 to see healthy mid-teens growth and a material decline in net debt to EBITDA to 2.5 times. So, we marginally cut our estimates and increase fair value or target to rupees 835 from 810 earlier on roll forward. So guys, that's all for today. See you again next week. Thank you and signing off.